Welcome to InvestEd Central's Market Minute, sponsored by StockCharts.com. Simply the web's best financial charts.
Good morning, everyone. Welcome to February 13th Market Minute. I'm John Hopkins, president of InvestEd Central. Right now, we've got the Dow futures up 83, S&P futures are up 9, and NASDAQ futures are up 17. Asian markets were mixed, while European shares were higher overnight. The market got off to a rough start Friday as traders decided to lock in some profits. The market had a negative tone all day long, but buyers did nibble some as the day went on. By the time the market closed, all of the major indexes finished lower, but there was no technical damage whatsoever. There are no key economic reports due out today. There are no major earnings reports due out today. On the S&P, we've got the 20-day moving average at 1323, the 50-day at 1281, and the 200-day at 1257. We've got support on the S&P at 1323 and resistance at 1356. The bears finally had at least one day go their way on Friday, but not enough to do any real damage. The S&P never threatened to test its 20-day moving average and just held fine in spite of weaker than expected consumer sentiment readings. In fact, the bit of selling we did get at least let some pressure out of a very overbought market. Still, a little more selling wouldn't be so bad, and 1323 should provide nice support. To the upside, the bulls will be looking at best last week's high of 1354 in the S&P, and if that's cleared, then 1370's in sight. Here's a bully trend fact. Since 1950, February has been the second worst month in terms of S&P 500 annualized performance, falling an average of 2.08%. If we exclude the first 3 days of February, this average annual return falls even further to minus 7.45%. So, while history's been aiding the bulls throughout much of the recent rally, they can no longer count on historical tailwinds to support their case. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.